Hey tax volunteers, this is Roy again, this time with a video demonstrating how to use this Practice Lab software when you do your certification tests. Probably most of you will be doing either the advanced or basic certification. So you've already done this volunteer standards of conduct certification and intake interview and quality review certification. So now you're into either again the basic or advanced certification, which is supposed to be linked over here, at least the questions. Yeah, but as I've checked today, this is mid-December 2022. It still shows the old 2021 questions. So make sure you're using the latest, should be 2022 test questions. And I'm going to go through in detail in preparing the return. So this video should take, it's going to be quite long, yeah? Okay, so um, you have already have an account here to get the certification test online. But now when you use Practice Lab, you're going to have another account, not the same account. And you also need to know the generic password. So let me just scroll down here real fast. So somewhere here on the screen here is the generic password, which I won't really point out in detail. Okay, so you have to grab that generic password. So let me go into the Practice Lab site. And here the first thing it'll ask you is what that generic password is. So I've just copied and pasted here. It's case sensitive and log in. And then now you got to apply for a Practice Lab account. Maybe your old account should work if you have one from the previous tax season. Yeah. But let me sign in. And then this is all support materials of how to use Practice Lab. But here I'll go to the practice area. And then here is the tax return year I'm working with. Looks like 2021 is also available if you want to go back a previous year. But I'm going to prepare a 2022 return. And here you can see under the client search, these are the 3 tax returns I've already prepared for the advanced certification. And then I would print out the return and then use that printout now to start answering questions in my exam file. But let's go back, and I'm going to start a new 2022 return. I'm not going to show you a real return for the test for 2022, but what I'm going to do is go back to 2021. This is a scenario in the advanced certification for 2021, Gilbert and Tara, Washington. So I'm going to use these facts, even though they're for 2021, and I'm going to create a 2022 return. And because the year has changed, because tax laws have changed, I'll try to keep things simple, yeah? Keep the same dates as much as possible, but also point out when there's differences in the law comparing 2021 with now the current 2022 tax laws, yeah? So again, here's the instructions telling us we need to prepare our tax return using the software before we can start answering the questions at the end of this scenario. So the first thing I would do if I were preparing a return, we're told to always check the ID of the taxpayers and also looking at their Social Security cards. Again, everybody being reported on the return, we need to see their Social Security cards to confirm their real name, not a nickname, and their correct Social Security numbers. And again, I would be looking at Gilbert and Tara's also photo ID. And the document I probably would also look at right away, if they brought it, is their prior year's tax return, in this case, the 2021 tax return. And then I would also compare that with the intake sheet, making sure things have stayed the same. Yeah. Again, they have to fill this out, this intake sheet that's 4 pages long. And then I would start interviewing them. Here we're told some information we got going through the interview. Gilbert's elementary school teacher. That should be indicated on that intake sheet. They're going to be filing, hopefully again, the same as the previous year, married filing joint. Gilbert is a teacher working these amount of hours during the year, which is more than enough to meet the test to have him be able to deduct at least part of this $500 classroom expenses. The limit has changed from 2021. Back in that year, the dollar amount limit was 250. Now for 2022, it's 300. So you won't be able to deduct this whole amount. Yeah. So either we or the tax software is going to limit it down to $300. We're told that Tara retired a few years ago and she started to collect her pension on October 1st of that year. And the pension is going to be a joint and survivor annuity. In other words, if Tara passes away, Gilbert will continue collecting that annuity. Here we're also told that there's probably some costs that's going to be recovered tax-free. And in past years, they recovered tax-free this $1,013. You can see it's given to us here in this paragraph. But I would confirm that by looking at the previous year 2021 return and see this number that they recovered or how much is left over that now they can recover in future years. We're told that Gilbert has some credit card debt that was canceled. And here's a key word here. We're told that they're solvent. In other words, they are able to pay off possibly the loan, but they didn't do it. Or if you're an accounting student, you know solvency means you have a positive equity. Your assets are bigger than your liabilities. And in the case of VITA, we only do this type of form, this forgiveness of debt, if the taxpayer is solvent. So anything that is canceled by the financial institution, all of it is going to be taxable income. And if they weren't solvent, then possibly some of that canceled debt is not taxable. But that's out of scope for VITA sites. Tara's a gambler. She won $3,000 at a casino and also another $150 in a lottery. And she has also losses. And then we have a son, Chandler. He's in the second year of college going for his bachelor's degree. We're going to see a Form 1098 showing the tuition and also showing, I believe, a scholarship that we're told has to be applied against the tuition. There may be more complex situations where a student gets a scholarship but doesn't necessarily have to apply it to a tuition. And there can be some tax planning tactics that you can use where you can report scholarship income to the student and then use more of the costs, tuition and other costs, qualifying costs, to increase the education credit. But that's not our case here. We're told that the terms require the scholarships to be applied against the tuition costs. And more education costs here for required textbooks, $450. And to qualify for the better of two different education credits here, Chandler was not convicted of any felony drug charges. Let's see. This economic impact payment does not apply now to our 2022 year. There was no economic or stimulus payments for 2022. So you're not going to have any what we call recovery rebate credit again for 2022. So this is a moot item here. And if they do qualify for credits, they're eligible now because they're US citizens and they got legitimate Social Security numbers. So again, I'm confirming by looking at their Social Security cards, their number and actual name we're going to be using on the tax return. So they've already filled out this intake sheet. And again, we'll come back and confirm this. One of the main things you need to do maybe right away is take a look at this checklist here and making sure that anything that's checked off yes, you're within scope of either your basic or advanced certification level. Okay, so you can double check that even before you start. Okay, let's see, direct deposit, if there's a refund. Here, our taxpayer wants to give $3 of the tax dollars to the presidential campaign fund and not by the spouse. Yeah? So W-2 for Gilbert, a 1099-R retirement income for Tara. Notice this box is empty here, the taxable amount, which makes things a little more complicated. If you have a taxable amount here, that's what's going to be taxable. But here it's blank, and here checked off taxable amount not determined. So we got to figure out, or let the software figure out, using something called a simplified method in calculating how much of this gross distribution is taxable. And here you can see Tara had contributed 13,500 into this retirement account over her work life. And now she's going to recover this tax-free, but spread over the rest of their joint lives. Okay, so we're going to need to figure that out. And Tara is also collecting Social Security benefits, even had taxes withheld from that. And here's Gilbert's cancellation of debt. Again, all of this is going to be taxable. And here is Tara's gambling winnings from the casino. Remember, she also had some lottery winnings that's also taxable. And then Chandler's tuition and scholarship. Again, we got to reduce this cost by the amount of the scholarship here. And then the rest can now be used to calculate the education credits. Here is more education costs, the books, and then information for their direct deposit using this routing number and bank account number. I think that's it. So let's get started. Oh, and of course the questions, yeah, after that. And again, you're only going to be answering these questions after you prepare the tax return. So let's go back to our Practice Lab software. Again, making sure we have the correct year. And I'm going to start the return. And the first thing it asks you is to enter the Social Security number. So I'm going to move my fax onto another screen that you cannot see. So I'll be able to see both at the same time. Yeah, I'll bring it up on your screen here if I need to show it to you. Okay, so here is the number I'm going to work with. So that's 416. The 00 is already there. Some software don't recognize 00s there, and it'll give you an error message, yeah, but not our Practice Lab, or, well, at least Practice Lab allows you to use those double zeros. And then I'll make up the last four digits to replace those X's. Again, just to confirm it's the same number, we have to enter it twice. Now, if I enter this and the Washingtons were here at our site last year, possibly the information like names, social security numbers, employer names and addresses, financial institution names and ID numbers, all would carry over, and we wouldn't have to retype it again. We'll just have to confirm it's the same and update any amount. Yeah. But I believe it's not going to carry over in my case here. So I'm going to start the return. I got to use a different number. I must have used it for somebody else here. So let's go 999 and enter. Okay, what's the important message here? Please note that certain calculations could change. Yeah, the tax software is always being updated. I think the software is updated enough to give us accurate, um, at least accurate enough tax returns to help us answer questions for the certification tests. So we're told they're going to file a joint return. Again, probably would confirm by looking at the previous year, nothing has changed in case of the filing status. So let's enter Gilbert's name. I'm not going to double check a lot here, but you should, yeah, on your own or have someone review your work. So his birth date, I got to go take a look at the um, input screen, not input screen, intake sheet. He was born on May 5th, 1964. And he's a teacher. He cannot be claimed as a dependent. He's not a student himself. He's not blind. He's not deceased. He does want to contribute $3 into the presidential campaign. He's not in a combat zone. He's not a non-resident. We weren't told he didn't deal with any cryptocurrency. We haven't gotten anything regarding this IRS notice. Okay, now Tara's information. I'm looking at her Social Security card. 417. I'll use 00, and I'll use the last same 4 digits. And she was born on March 11, 1956. And she's retired. And I don't think any of these checkboxes would apply to her. Their address, 1, 2, 3. I'm looking at the intake sheet. Okay? Just don't assume it's being the same as the previous year. And we're told to use your own zip code. So it's going to fill in the city and the state automatically for you. I'm going to make up a phone number here. Our Hawaii area code. You know, and then we don't need email. So I'll continue. And we do have a dependent, Chandler. Again, I'm looking at his Social Security card. And then on the intake sheet, again, let me point it out here again on this intake sheet. You as the preparer, gotta fill in the shaded area over here to confirm that Chandler is either a qualifying child or other qualifying relative. Here you can see the birth date I'm using now. And again, if we had done his return in the prior year at a VITA site, probably all of this information should have been carried over automatically by the software. Okay, so we got our Social Security card. He is a citizen. He is the son of our taxpayer. He was living with the taxpayers for 12 months for the year, including if he were even dorming off on campus. Yeah, that's considered still to be at home with the taxpayers. This person was, according to his age, 19 or 20, and a student. So none of these would apply to him. Okay, I didn't enter his birth date. He was born August, where's my cursor? August 6, 2002. And let's continue. So here we're in this federal section in the income subsection with all the different types of income here. So let's go into the first income item, which is Gilbert's W-2 form. This is for Gilbert. And the employer ID number, I'm looking at now the W-2 form. The ID number for his school, 35700. And I just fill up nines for the rest here. And someone's using this number for a different employer. So I'll retype in his employer name from the W-2 form. I'm going to keep this wrong address to just speed up things here. I should change the zip code. And his gross earnings are $35,502. His federal withholding is $2,800. Here you can see the wages for Social Security taxes and Medicare taxes automatically gets fed by this income taxable wages, and multiplying it by the tax rate, you get this tax. And the amount is incorrect here. If you see a different amount on the W-2 form, you should change it to what you see on that form. You can see there's $1,000 difference between these two boxes here, and we'll see where that $1,000 come from further down on this screen. So it's calculating to the Social Security tax I see on the W-2 form. So that's some confirmation that you're doing it correctly. So I got to change this Medicare wages. And again, I confirm this tax matches what I see on the tax form. So the next box is box 12 with a code of D. This is the retirement amount he's taking out of his paycheck. And it's reducing this wages up here that's subject to income tax. He still pays the Social Security and Medicare taxes on his full wages, yeah, before this $1,000 deduction. And he is a participant in the employer retirement plan. So I check it off. Again, I'm looking at the W-2 form. I'm then trying to match it. So state information, I'm using my state and employer ID number. And it's automatically pulling the number from box 1 down here to the state taxable wages. And I confirm it's the same as my paper W-2. State income taxes withheld, $350. So let's see what happens. Keep your eye on these boxes over here. If I continue. So here is now the federal adjusted gross income. Yeah, that box 1 of the W-2. And here is his refund. Of course, it's going to change, as we add more income or deductions into the return. But you can always kind of tell whether you're on the right track. If you add income, this income number here should go up, and the tax refund should go down, right? If you add deductions, this should go down, and this should go up. If you add tax credits, this number here should go up. Okay, let's continue. Typically, keep on clicking and continue until you see a next income item or next type of item. Otherwise, you may not have finished all the steps for that item you just finished. Let's take a look now at Tara's retirement income reported on the 1099-R. On a 1099-R. Okay, and this is for Tara. And the ID number for the paying company. Maple? No, it's, I'm going to keep this name. I don't want to change it. I don't want to spend time changing it. Okay, and then what I see in box one is $18,485, but it's not this amount that's taxable. It's blank on my form. So I got to find out where I can calculate the amount that's taxable. The taxable amount is not determined. That box was checked off. Do you need to calculate your taxable amount? Yeah, I want to do that. Click here for options. And here's the term I mentioned before, yeah, simplified method. So let's do that. Now again, if we did her return in the previous year, this probably would be partially filled in for us already. So let's continue. And then the plan cost at the annuity start date. That should be on the 1099-R form. This amount right here, yeah, 13,500. This is what she's going to get back tax-free, but over their lifetime. So we're going to be reducing this amount she received for the year to see how much of this amount is being used up tax-free. 13,500. And the date she started now, way back in what, 2018? Let's find out that date again. Again, I would look at the prior year return to find this out. It's October 1st, 2018. October 1st, 2018. There's no death benefit exclusion. Now we got to figure out her age at the time she started to collect this pension. And it's important to know what's their birth date. Was it before or after October 1st? Yeah. And that'll determine their age at the time this started. So again, let's take a look at their birth information. That's on the intake sheet. Remember, this is a joint and survivor annuity. So both of them had their birthday before October 1st. So all we need to do is take the year that pension retirement annuity started, 2018, and minus out, let's see, her birth date is 1956. She was 62 years old when she started to collect on that retirement income. Let me put that in memory. And then 2018 again, and I subtract out Gilbert's birth year, 1964. So he was 54 when Tara started to collect her retirement income. So add up both amounts, and that's 116 years. So let's see if that's entered here. Yeah, 116 years total age at the time of this date here. And the number of payments, she's receiving monthly payments of her annuity, and how much was previously covered tax-free that was given to us here at the beginning of the problem. This $1,013. Again, I would look at the prior year return to get this amount. Here we're just given it in this paragraph form. Okay, keep your eye on these numbers now. Now, did I enter the tax withholdings? on her pension, this 1840.49. Let's go back into the form here. You'll notice now the taxable amount is less than the gross amount. Continue, continue. Yeah, I'm missing that withholding here. 1849. Yeah, always click on the continue button at the bottom. Oh, I forgot the distribution code, which is 7. I don't think I'm missing anything else here. Now, if you're doing a Hawaii return, possibly some of this taxable amount may be excluded if it was funded by the employer, yeah, not the employee, which is probably the case. So let's continue, but I'm going to, this is just a warning that says the taxable amount is less than the gross, which we confirm that because we're using the simplified method. And we don't have any early withdrawals for disasters. Continue. Okay, you can see the numbers changing over here. So I just finished this 1099-R. Let's go back into this button and do the Social Security Administration benefits here, Social Security benefits. So I'm looking at her, Tara's SSA 1099 form. And the amount she got is just 21,102. Federal taxes withheld. Most taxpayers probably don't get taxes withheld, yeah, but Tara knows she's going to owe if she don't have taxes withheld. 2020. And probably not used, but we enter it anyway. This Medicare premium that was withheld from her Social Security benefits, 1802. You know, I got it in the wrong box here, so let me move everything down. This is not the taxpayer, but Tara, the spouse. And if Gilbert was receiving benefits, let me redo all of this here. Okay, so the numbers are changing. Next item. What's next? The cancellation of debt income. I don't think you see it directly on this list here. Here it is, the cancellation of debt at the very bottom. Cancellation of debt, 1099C. Let's create a form. This is for Gilbert. The creditor name is Adelphi Bank. And the amount is $750. Okay, that's all we need. This should go up by $750 when I continue. Okay, what's next? Gambling winnings. So where is that? Here it is again from that other income. Gambling winnings on Form W2G. This is for Tara. Oh, it already filled it in here. Yeah, Chevy Casino. Let's change the zip. 3,000. Losses limited to about. Even though we're asked to enter the loss here, it's not going to be deducted directly. Yeah, it's only if you claim itemized deductions, which I'm sure the Washingtons don't do because they don't have enough. But let's enter the gambling losses anyway, and it's not on this form. Yeah, you have to keep track of it separately, and the taxpayers would need to tell you that amount. So here in the interview, the losses were 1,500. Okay, make a note that you have to also pick up this $150 of lottery winnings. Okay, I gotta do this red asterisk here. Slot machine. July 4th. I'm changing the year. Yeah. So where can I enter that $150 of lottery winnings? Let's see. I'll just make up another item here. Save and enter another. Tara. I'll just make up a number here. Okay. Not valid. Okay, let's try something else here. Let's try again. Just confirming the gambling winnings again. Yeah, 3150. Okay, so what's the next item? Looks like it's the tuition and scholarship. So let's see if we can find the form here. I'm going to just continue. Income, I think I'm done. Deductions. Here under deductions is credit, so we're looking for the education credit. Education credit. It's for Chandler and not the taxpayers. And he qualifies for the better of the two credits, the American Opportunity, which can be used for those that don't have a bachelor's degree yet, yeah, and hasn't been used in 4 tax years for that same student. So let's grab the American Opportunities and the qualifying expenses. It doesn't allow us to calculate here on the software, so we got to calculate it off the screen here. So that's the tuition of 5,218, and we minus the scholarship of 2013, and we add the textbooks. The 450. So here's the net, 3655. I'm going to copy that and paste it here. So coming from the 1099-T, we need information. That's 38,800. Wow, here, Gordon College. It's not asking for the ID number. Did the student receive that form? Yes. How about last year's form with these 2 boxes checked off? Okay, that's the no. Here's the ID number, 38,800. And has that American Opportunities or predecessor called Hope Scholarship Credit been used for 4 prior years? He's a sophomore, yeah, so not 4 years. And was he at least half time? That's right on the form here, yeah, this checkbox. And did he finish his bachelor's degree? Was he convicted of drug charges? We were told no, yeah, at the start of this problem. Let's see if you can see the credit increase here. The income should stay the same, yeah, when you have a credit. This refund should increase. Come on. Wow. Big change. Let's continue. Continue. I'm going to go back and take a look at that intake sheet again to make sure we hit all of the income and deductions and credits. We didn't get any 1095A form. That's for the premium tax credit. And right now, the state tax return software is not available. And then this screen shows the wages. Well, let's confirm from the top. Married filing joint are taxpayers. Their social security number, address. Chandler are dependent. Notice a check off here for the other relative credit. That's a $500 credit. versus the $2,000 child tax credit. Yeah, Chandler's too old for that. So wage income, let's see if I can zoom in here. It's so small. Tara's um, retirement income, notice it's less than the gross amount, which was 18 something, yeah? And then her taxable Social Security, um, is this the gambling income? Can't tell from this screen here, yeah? But anyway, why don't we go back and take a look at the intake sheet one more time. Okay, we got the W-2, got the scholarship, including the tuition costs. That's down here someplace. Yeah, this one here. We got her retirement income. We got her Social Security income. We got her gambling income. And then this $1,000 contribution to the retirement plan for Gilbert was coming from his W-2. Yeah. And then did we get this deduction? I don't think we entered it, yeah? We're told at the beginning Gilbert spent $500 for his classroom expenses as a teacher. So let's go find that deduction in the software. Federal section, deduction, and this type of deduction is called an adjustment. He's a teacher. And here, even though he spent 500, we're told to limit it to 300. Okay, so got that item. And then we got the cancellation of debt. And this economic impact payment doesn't apply to 2022. We got that presidential campaign checkbox. Okay, direct deposit, we just need to continue with the software to hit this direct deposit information. Okay, let's continue here. Let's go back and look at the screen for the 1040. And we'll just continue from this point. Okay, let's see. Yeah, we don't have state returns because the software is not ready yet. Okay, refund. We're going to have it direct deposited. We're going to e-file the return and have the refund direct deposited as they instructed. I don't think these optional questions are ready here. Yeah, these optional questions probably would be these over here. Yeah, so let's just continue. And continue. So let's do that direct deposit. It's going to go into a checking account. The bank name I think it's a Delphi. A Delphi Bank and Trust. And I'm going to pull that refund straight into this box here by clicking on this button. Routing number. Again, confirming, yeah. Then account number. All going into just one bank account. Okay, so these questions here, if they were there, would be these over here, yeah? But again, it's not set up in this software. I am not sure what even this screen is here. Okay, so IRS not ready for us to e-file. So here's a summary. This is the refund, and it's going to be direct deposited into their bank account. If there was a state refund, it also could be direct deposited into that same account. We're now able to either print here, or we could have printed from this screen over here, or even from the start of the software, you could also print this return. Here's some flags if you want to tag the return for notices for other people to look at. Okay. So when you save the return, you're not electronically filing, you're just setting it up for whoever's in charge to submit the e-file tax return. Okay. Again, even though you create the e-file, you don't submit it. Someone else is going to do that. But let's take a look at the PDF copy of the return here. Yeah, there's different versions. This is sufficient here. Okay, it didn't do it. Not sure why. Let's try someplace else here. Let's go back to this screen, summary screen, and do it from this link here. So let's look at the 1040. Well, this is the form, yeah, the taxpayer needs to sign for us to get permission to electronically file the return. And of course, you're giving a copy of all of this printed tax return for the taxpayer for their records. So filing status, married filing joint, taxpayer's name and social security number, their current address. Looks like Tara is older, so she gets an additional standard deduction for the couple. Here's Chandler's information as a dependent, giving them a $500 other relative credit. Let's see, the wage income. These lines here are all new, yeah, all wage salary income. And then pension income, remember we use a simplified method to get this 17,472. And then social security income, you can always test if they've hit the maximum taxable. See, if I take that 21,102 and I multiply it by 85%, you can see this is the maximum social security they've hit to be taxable. Yeah, 85% of this number here. And then Tara's gambling winnings coming from Schedule 1. Here's the educated classroom deduction limited to 300. And they get a standard deduction. Let's see if it's filled out down here. They're married, filing joint, and Tara being over 65. Here's their standard deduction, 27,300. And the tax for the whole year, minusing Chandler's other dependent $500 credit. Let's see, there's more credit. You see this 1448 and this 966? The total of those two amounts is the education credit. Part of it is up here, which is the non-refundable part, and part of it, I think 40% down here, that's the refundable part. So they get the benefit of the um, total education credit. So here is the taxes taken out from Gilbert's pay, and here's the taxes taken off from Tara's Social Security and retirement income. And they ultimately get this refund that's going to be direct deposited into their checking account. Okay, so I think I'm now ready to answer the questions at the end of the problem based upon what I see here on this tax return. Okay, I know this is a long video, but it's just give you a walkthrough of what you're probably also going to see when you do real returns, in the tax layer program. Okay, I'll talk to you later.